why should you be investing in other asset classes outside of real estate? In the next decade, there could be a completely different asset class that you may be missing. And today, I got a really good friend of mine named Andrew McDannels on the line that specializes in economics as well as natural resource investing. And today, thank you so much, Andrew, for joining me. I really appreciate it. I'm super excited to have you to kind of explain to everybody a little bit about your background and why you think natural resources might be a better investment for the next decade than real estate or other asset classes that, may be coming up. Can you give a little bit about your background and what you specialize in, man?
Sure. Thanks for having me on your show, man. It's a pleasure. I've known you for over 10 years now, and we've been working together for several years. So it's a pleasure for me to do this with you and to help other people learn about what I'm doing and stuff like that. Well, the easy short answer to that is I've got over a decade of financial market experience. I've got a master's in finance. I would say that the way to describe myself, I'm a master Yoda level economist
Nice.
and master Yoda level ANCAP. So I would consider myself an anarcho-capitalist. And I wasn't always that way. I started out as a raging socialist when I lived in Scotland. Yeah,
Nice.
because believe it or not, Scotland is one of the epicenters of socialism. So all my friends, family, sources of influence was all left leaning. But then once I went through and took a few finance courses and business courses in college, I realized really quickly that I was being lied to. And I learned firsthand experience about how the world works. And then I got introduced to Milton Friedman, Murray Rothbard, Mises, Hayek, all the economists, and basically from there formed my own opinions and learned from the best. Those are the masters, basically. And so through losing lots of my own money and making mistakes, I got to where I am today, where I'm traveling the world with my family. I'm currently in Cyprus, and I've lived in over 7 countries in the past year and a half.
That's
So
amazing, man. And it's all because of, your philosophy, obviously believing in, I think you renounce your citizenship so that you can actually go out and do this and actually live the way you should be living and the way you want to live with your family and not have to deal with, US taxation and some of the theft that occurs there, of course, which is awesome. And I really commend you for that. A lot of people don't have the guts to do that kind of thing. And, it all comes down to your philosophies on the investing side and what you believe is actually occurring in this country. And, of course, seeing what's happening on the economic side. And I agree with you 100% when it comes down to being able to decipher what's really happening going on right now and following the money and understanding the financial side of the system. And I think that's really key to a lot of your investment philosophy here is understanding that financial side and what's really occurring in this country and globally to be able to kind of reposition yourself on the investment side. So can you talk a little bit about what you've been doing in the last few years and what you're focused on now?
yeah, well, we've been closely working together for several years now, and so kind of like I'm your yin to your yang, right? So like, I try to bring economic data to you to help you make decisions in your business. When it comes to lending or multifamily investing
Yeah, that's
and
huge.
self
Right.
storage and stuff like that. So like we work as a team that way, and so I love to bring that kind of data to you, and it's my passion to do that because I feel it's one of my gifts to be able to take data and to extract it and then understand and explain it in an easy way. I think that's what a true master is somebody that can take data and information and then make it easily understandable. And so I've always had that gift when it comes to economics and finance and things like that. But my philosophy basically, and what, kind of what I'm doing is over the past few years, I knew that a big global recession was coming. And I know there's a global debt bomb about to explode. And I really learned all that from reading Rich Dad, Poor Dad and the Robert Kiyosaki books. So I basically learned gold and silver investing from the Rich Dad book series.
Okay.
And so um, I got my foundation through that, and I was able to basically come up with an analysis that, okay, we can't put all our eggs in real estate, because right now real estate, the death blow to real estate is high unemployment and high interest rates. Both are on the way, and the tenants are going to get whacked with high inflation. I really think that real estate is going to get whacked for the next 5 to 10 years. There'll be pockets of good deals and things like that. So there'll always be a way to make money in real estate, but I don't want to be overexposed to it.
Mhm.
And I don't think that you should be overexposed, or anybody that you know or help. And
Right.
so it's really just the fact that uh, I was really looking for the past few years, what can I invest in to make money, like good money, but also that will have some sort of protection against if there is a downside in the markets. Do I want to invest in the dollar? No. Do I want to invest in bonds? No. Um, so there's not really many other options out there other than physical metals, minerals, and mining and exploration. So that's really how I got to that level. It's basically spending time to think about what is out there and what will make a return when fear enters the market.
Right. And I think it's important to definitely understand that. And I'm excited actually for changes in the real estate market as those types of things occur. And we see what's considered a strong job market based on what people are saying the data is, but actually full-time employment has not increased. It's been part-time employment. And so the numbers have been skewed. And so things are worse than they may seem because numbers are changing and the numbers aren't really real with what they're really coming out with. And I think, as things change, there's going to be great opportunity in real estate, but at this, to be able to pick things up in major discounts, but at the same time, learning to mitigate risk as well as protect yourself and actually diversify into these other asset classes as an insurance policy at the very least, let alone even a growth policy, in your portfolio down the line, and looking at this from a growth perspective, because, you could be making 10x on your money with some of these major changes that could be occurring. So whether you may have some hits over here, while over here in gold and silver and mining and different asset classes that you may not normally focus on as a real estate investor, you could be making 10x on your money on this side if you properly plan and mitigate, invest with the right companies and things like that. And so I think a lot of this comes down to, hey, what is the Fed going to do, right? You can see fully that, obviously with their interest rate increases that they've already had, that they control so much of the real estate market as a whole and the economy as a whole, just with, the flip of the switch with them increasing rates and things like that. They have a lot more control than a lot of people think they do and manipulation of the market, which is what they had for the last, 10 years plus with ridiculously artificially low rates. What do you think the Fed is going to be doing moving forward with regard to interest rates and their kind of policy moving forward? Because we haven't seen the reduction in inflation that they've been trying to get from their rate increases so far.
Yeah, the what they're saying that what they're doing is they're cherry picking the things to make inflation look better than it is.
Right,
The real
right.
inflation is 15 to 20%, and if you think about it, the things that you really buy have went up in price a lot.
Right.
So they really cherry pick that data, and
Absolutely.
they really manipulate it to make it look better than it is. But um, what are they going to do? That's the $1 million question. There's really two outcomes here. One, the first outcome, they continue with rate increases. And if they continue doing this, they'll crash everything. Something will break. The entire world's financial systems will break. The pension systems will break. Something will break. Then the second option is they will stop raising rates, and they will basically uh, start QE again, which is money printing.
Right.
And if they do this, you'll have maybe a rally in the markets to begin with. And maybe that heroin will last for 1 or 2 years, but then you'll end up with 30, 40, 50, 60, 100% inflation.
Hmm.
And then at that point, the inflation rate will destroy the markets. So either way, you're going to destroy the markets. You'll either destroy them right away,
Mhm.
or you end up down the line destroying it even worse. And I think they're going to take option B.
Yeah,
and
and looking at that too, if they keep increasing rates, you're still going to have inflation because you have such a massive national debt anyways, right? And so, and then if they go and they print money, like you said, you're just talking about, another 2020 to 2022 printing scheme again, where they increase 40% of the money supply and they just keep doing that. But it doesn't, at some point, it doesn't help. And like exactly what you said, even if the real inflation rate that is, that they're saying is actually happening is 6, you go to shadowstats.com, you see what the real inflation rate is as if they measured it back in the 1970s, and you're looking 15-20%. And those types of things are not built into people's affordability ratios when they're qualifying for financing or qualifying for rents. You have a major increase in people's everyday expenses with regard to food, with regard to gasoline, with regard to everything that just consistently increases in price. And that's not built into qualification standards, let alone the affordability being hit already with regard to rates. And so, paying attention to this is extremely important when it comes down to which investment strategies you should be focused on, right? But either way, like you said, I think there is going to be a crash to the market and all markets. I think there's going to be massive opportunity though in to be able to pick up discounted properties and things like that. Is just a matter of when, right? You don't want to catch a falling knife, consistently on that. And you want to wait for that right cycle to come back, of course, or invest in strategic asset classes where you're being very safe. You're just focused on cash flow and, riding any waves down and picking up discounts now to kind of mitigate some of that. But on the other side of things, you have, the beneficiaries of that type of inflation in different ways. Maybe, people running to, natural resources and things like that, because, it's such a big demand now and it's such a big need coming up in the future as well. So what do you think is going to be happening to, the dollar in the near future if this occurs, right? Either way, right? You're either going to crash everything or keep printing. And, what do you think is going to
well,
occur?
I'd be surprised, but I think in the initial term, if there's a if there's a distress in the markets, the dollar will get stronger before it gets weaker.
Hmm.
So the dollar will actually, if you notice, the D is called the Dixie, DXY.
Hmm.
The Dixie, which is the basket of the dollar against basket of currencies, that might will actually get stronger before it gets weaker, because it's a flight to safety.
Hmm.
Now, eventually, the dollar is going to be trash, and so uh, I always said to people, especially in my mining groups, that uh, gold and silver will get whacked one more time during a sell-off, and
Hmm.
then after that, they'll be the first to rally really extremely hard. It will look like what happened to Bitcoin.
Right.
So the dollar is going to get wiped out because it's right now the world is removing itself from the dollar standard and the dollar reserve standard, and it's moving towards the BRIC nations, which are going to be asset-backed currencies or some kind of currency that's backed. Or what they'll do is they'll trade with one another, and then whatever the trade balance is, they'll pay that in gold. So, for
Okay.
example, let's say Russia and China trade with each other. They'll trade the goods back and forth, but if there's like say $500 million of an imbalance, that'll be settled in gold, I think.
Okay. And
But
and normally
the
things
ultimate
crash
thing is the dollar is going to be worthless. Yeah,
and normally things crash first because there's a big shakeout in the economy. People start selling gold and silver in order to get cash back because they need the
margin
money,
calls.
right? And then people are like, "Oh man, I got a flight to safety. Let me get back into this." As that crashes. I think that happens at pretty much every major cycle. You see that start occurring where there's a sell off of those metals as economies crash, and then a rebuy of those kind of precious metals down the line as the people realize, oh my gosh, I got to get into this quick because the dollar is inflating so much, or you have this major inflation and you're losing purchasing power over here on that side, right? So, interesting scenario. And what do you think is really going to be happening with interest rates in the next, next 6 months or so, or the next year or so, as
Okay.
this all shakes out?
Yeah, so it's really dependent on what the Fed does. If the Fed continues raising rates, they're not purchasing bonds. So there is no buyers of bonds other than just U.S. like consumers that are putting their money because there's higher interest rates now.
Right.
Um, but if you notice, China, Japan are all reducing their levels of treasury ownership.
Hmm.
So there's no foreign uh, the foreign ownership of treasuries has dropped a lot, and basically the Fed will be the only buyer of U.S. debt, U.S. government debt, and if they have to start QE to do that. So interest rates will rise even if they start QE because they're going to be the only buyer. Would you want to buy government debt
Yeah.
if they're going to be in default? They're not going
Right.
to bring in enough tax revenue to cover. It's just you can't run deficits of 1, 2, 3 trillion every single year. It's impossible.
Right.
So we're going to end up in a scenario. I really think that we're going to have a U.S. Treasury at some point in the not too. It will happen really soon, sooner than people think. I was laughed at several years ago for saying that. We were very close to 10% in the non-QM funding. So for 30 years, basically, like touched 8-9%, and so I really think that the interest rates are going to rise in the future, and that's bad for real estate.
Hmm. Hmm. Okay. And so, shifting into, the commodity market to try to protect yourself from these types of scenarios, right? If real estate does take a hit, of course, making sure you're in, very safe, low leverage type strategies so that way you're protected there. Of course, real estate prices could be going up while the, true value is going down because of adjustments for inflation and things like that, where inflation could be at this rate but real estate could be break even or not, or flat, right, as inflation continues to occur, or real estate could be dropping while inflation is going up and you're losing purchasing power that way. So it could happen
Well,
in either way, right?
what will happen is interest rates will be higher than cap rates, and
Hmm.
so you'll have a situation where you can't make any money. You can't make a spread,
Right.
and
Okay.
so that's the it's already happening actually.
Right, especially in the multifamily space, we're seeing it quite a bit
Yeah,
where those rates are higher than what the cap rates were. And, there's still this shaking out period right now where sellers are not actually willing to take discounts yet, because their mindset is still at
they think
that higher price. But
they
with the
think of
rate
what's happened
increases,
in the past.
right. With
Mhm.
the rate increases happening, like the just affordability is just not there. The numbers are not matching up for buyers. And so you're seeing that happen with a lot of people trying to refinance their properties. And there's a massive amount of multifamily assets
They can't
coming on.
refinance.
Yeah, they're not going to be able to be financed. And there's a big amount that's about to be refinanced or try to, and they're not going to be able to, in my opinion. I think there's going to
Exactly.
be a big shaking out in that industry to be careful of, of course.
I've seen
So,
plenty of examples already. I've seen it
right,
happen. I've seen
right.
people complaining that they can't refinance. They're stuck. They're doing capital calls,
Hmm.
trying to raise money to yeah, they're not cash flowing already. It's
Right,
already happening. It's
right.
only going to get worse.
Right. And so how do you go and protect yourself? What are your favorite, commodity investments right now? And how do you learn about what to invest in on the commodity side? You've been helping
Yeah,
me a ton with this stuff, showing me
sure.
data and charts and supply issues with commodities, and all those things I think are extremely important when you're picking the right
Well,
types of commodities and
yeah.
your focus, right?
Well, so you asked two questions. The first question is, well, let's start with the easiest one. How do you learn about it? Well, you learn by doing. How do when you go swimming, do you read about learning to go swimming, or do you jump in the water and try to learn how to swim?
Right.
When you're riding
Right.
a bike, same thing.
It's the
You
same
don't
thing with
learn
real
by sitting
estate.
on the
Yeah.
sides. Exactly. So, you work with somebody you know, like, and trust, and that's how you
Try to
learn.
learn from them as
You get
best you
somebody
can.
that's doing what you want to do, and you follow them.
Right.
Um, and as far as my favorite commodities, I mean, we could be here an hour just talking about that. Uh, Really, I think that the best opportunity this year is lithium, nickel, uranium, and possibly platinum. But I think platinum is maybe a one or two, that's probably a 2 or 3 year kind of push for that. But gold and silver, I love them, but they're not my favorite.
Okay.
So
And what are the primary reasons behind some of these things that you're saying that some of these other, these other commodities would be better bets or, potentially better assets into the
yeah,
future to protect yourself?
because you see, right now there's a mad rush to get battery metals and electrical metals for cars and manufacturing. So they're really like aggressive right now. Governments are trying to push through and actually provide funding and shorter permit times for lithium, cobalt, and things like that, battery metals,
Okay.
because either that or the car manufacturers stop producing cars, and they
Right.
have these timelines. They have the net zero, which is they have to get to net zero by 2050,
Hmm.
zero emissions by 2050, and they need all these electrical cars and I don't think me personally, I don't think electric cars is the future. I think hydrogen cars are the future,
Okay.
because you can take a hydrogen fuel cell. Hydrogen is created with electricity and platinum, and the electricity goes into the platinum plates and creates hydrogen. The fuel cell can be put into an existing car, like a diesel engine or a gasoline engine, and run 90% of the fuel consumption just from water, basically.
Okay.
So and so you can convert your existing cars into hydrogen cars just with the fuel cell. And so it's the future of it's honestly it's so cheap to convert it. They won't tell you that because they want to push the electrical cars.
Right.
Um, but why they're pushing that, these type of metals first, is just that I think gold and silver will go up once there's a market crash. That's going to take maybe a year or two. I I don't know. I'm not in the business to determine how quick something will happen.
Hmm.
I just know it's inevitable.
Right. Makes sense. And when you're dealing with a lot of these different commodities that you're talking about, so you're saying the primary catalyst to this is going to be the supply needed versus the current
Yeah.
demand. And my
Demand is
understanding is
increasing.
right. And
Yes,
my understanding is some of these, in order to get the extra supply, can take years of
yeah,
exploration and mining
yeah,
to actually bring that supply online,
yeah.
right? What are your thoughts
Exactly.
on that aspect?
Yeah. So so supplies are flat or limited. Demand is through the roof. So what does
Okay.
that do to price? Price
Right.
has to go up because of that reason.
Hmm.
Lithium was not a hot commodity until electrical batteries were needed, right? So it's only in the past couple of years that miners ever cared about lithium. So now there's a mad dash to try to find as much lithium as possible and get it to the market as soon as possible. The problem is all the environmentalists make it impossible to build a mine fast enough.
Right.
So they want this net zero goals, but they don't want the mines to be built. So how does that work?
The price has got to
So
go up, right? Yeah.
you've got a situation where it takes on average 10 to 15 years to build a mine,
Okay.
and they want these things tomorrow. So what does that do to price? It's got to make it go through the roof. And and the problem is finding a deposit is like finding a needle in a haystack. It's a 1 in 1,000 chance of finding something, maybe even 1 in 10,000
Hmm.
chance.
Hmm.
So it takes a lot of time, a lot of money, a lot of luck, and these things just don't happen tomorrow.
Right.
And so all these people want these things to immediately, and the market can't provide it. So
Right.
that's hopefully the easy answer I can give you.
Absolutely makes sense. And so, if I'm trying to go invest in some of these things like nickel and copper and, other asset classes like this, should I be buying all this stuff and storing, I'm going to have a whole room full of nickel to actually invest enough money to do this, right? So, or,
Yeah.
a room full of gold and silver, right? Should you be buying some of this to hold, in your own possession? How should you be investing in this type of, investment in the first place in these commodities?
Yeah. So I like having, 10% of my net worth in physical metals,
Okay.
platinum, gold, silver. I like platinum. Platinum is my favorite out of the precious metals. It's rarer than gold. Um, it's an insurance policy. It's nothing else. I don't ever want to sell it. It's insurance against catastrophe in the financial markets.
Okay.
The markets, if let's say if there's an EMP attack and you can't get your cash at the ATM machine,
Right.
you're not able to get your cash out, and you have to have money to be able to you, you need to be able to trade and get
Right.
food and stuff. So yeah, so it's really catastrophic insurance.
Okay.
Um,
Makes sense.
but billionaire advice is 90% should go into uh, mining stocks, mining and exploration stocks. The reason being, there's a sales multiple added to, like, so the gold and silver is the collateral in the ground, right? So they're worth X amount of money. But think about it like this. Let's say, let's make it an easy example. A pizza shop. Let's say a pizza shop makes 100 grand a year.
Hmm.
Well, they're not going to sell that pizza shop for 100 grand. They're going to
Right.
sell it for maybe $1 million. So 10 times their earnings.
Okay.
Same thing with mining companies. So there's a sales multiple, 10 times earnings, maybe 5 times earnings, 20 times earnings. That's why you invest in the mining stocks. You get the increase in metal prices benefit, plus you get the increase multiple to your benefit.
Okay. And when you're investing in these different mining companies, obviously you're investing in the value of the company in itself, of course, and there's different values if you have a mining company that has found the mine that actually is going to be producing versus something where you are trying to, it's, pre-discovery, right? They're looking for those mines and drilling holes and things like that. Can you talk a little bit about, pre and post discovery,
Yeah.
investments and the risk differences there, and kind of a little bit about that to give people an understanding?
Yeah, there's two kinds. In exploration, there's things called pre-discovery and post-discovery. Pre-discovery is when they haven't found anything, and it's kind of like going to Vegas and pulling the lever and hoping that you get the jackpot.
Right.
Uh, it's the most extreme risk. It's the riskiest thing you can invest in.
Okay.
So I don't do that. I don't do that. I
Okay.
don't mess with that. That's Vegas.
Right.
I like post discovery. Post discovery means they found something, but they just don't know how big it is. They don't know how many ounces in the ground. They don't know how much, what types of metal, like how many different types of metals. They might have an idea, but they haven't really got concrete evidence completely. Um, so I like to be able to I like to invest in exploration companies that have a big, huge deposit. I want to invest only in big deposits. I don't want to invest in small deposits.
Okay.
The reason being, small mines and big mines have the same risks, whereas small mines will make you small money, big mines make you big money.
Makes
So
sense.
if the risks are the same, what do you want to make? Small money or big money? I like to make big money. Um, so that's the reason why. And by investing in post discovery, is it removes a lot of the risk. They already have something, they just don't know how big it is, and so um, they need maybe another year or two of drilling to determine the exact total amount of ounces. And
Hmm.
then once they get that amount, once they know that, their value increases each time they announce drill results if it's good.
Okay. And that's how you primarily manage risk in when you're investing in these mining companies, is you're going through and finding these companies that have already found a deposit, and maybe they've already notified everybody that, hey, this is how much we've found, and then you're looking at the price of the company and the price of the stocks of those
Well,
companies versus the
here's
value of what's in the ground. What other ways are you mitigating
here,
risk there?
here's here's how I do it. I try to get in as early as possible. Now I have to take risk. If you don't take risk, then you get in when there's no meat on the bone left.
Hmm.
Does that make sense?
Yep.
So I want to get in just as they found something, but just as they start the drilling process, not when they're just become a mine or something, because they already have all the ounces, they've already found them already. All the risk is removed, and all the
Right.
profit potential is removed as well, because the stock price should usually go up as they discover more and more drill holes, and have good results. So um, there's a lot of ways to reduce risk when it comes to the individual companies. I only limit probably 5% of my portfolio in any one company. I make sure that the team has got experience, they've got previous successes. Uh, it's in a zone, a jurisdiction zone that is, I would say, safer than another, like, a place where it's totally run by the government, like North Korea or something like that.
Right. Right.
So, right. So there's a lot of ways that I can reduce risk to me personally, but I can't eliminate every single risk. You have to take some risk, otherwise you won't make money.
Okay, that makes a lot of sense. And of course, being able to pick the right companies where you are seeing a significant amount of value there in the ground versus the stock prices and what the future earnings potential of those companies are. Plus, on top of that, the value increases in the supply and demand issues that you're seeing on top of that. That's where you're saying, hey, these things could be majorly exponential in the
Yeah.
future, where you can get value on the individual stocks as they currently stand based on
Yeah.
what's in the ground and the stock prices, but also also on the other side of things with regard to the increase in demand versus the amount of supply that's out there and the potential increase in
Yeah,
those actual commodity
exactly.
prices, right?
Exactly. As the price increases, they increase in value too.
Okay.
So it's really like there's multiple cherries on top of the cake.
Okay. And how do
Right?
you compare this stuff from one stock to another? And is that what you're really
Yeah.
looking at? Those prices
Yeah,
per
so
share per
yeah, so it's really there's really, like, there's about 2,000 or three, 2,500 companies out there, you could go look at, and really there's only about 2 or 300 that are any good.
okay.
So I try to eliminate as many as possible, just by, you know just by getting rid of the crap and focusing only on names in the industries that are they've got extremely great teams, and they've got past experience, past wins, and one of the questions you ask is, okay, how do you pick your individual stocks? Well, it's really, I look for, what do they have, and how much do they have, and what's the potential? Could Is there more that's, is it possible that they have another kilometer or 2 kilometers more of stuff to be able to explore? And so I really look at a lot of different factors. I read reports, I listen to interviews, I listen to, basically go through the entire website
Hmm.
and learn about each company as much as I can, to the point where I'm very comfortable with anything that I purchase. And so it's really comes down to uh, trying to eliminate risk, but um, get into the best companies possible. And then, let's say I enter a company and it doesn't turn out to be as good as I thought. Well, I can sell and put my money into another option. And I have probably like 30 companies that I've got on my list right now that I've invested in personally.
Okay, and yeah, I mean, I do the same thing with syndications. It's about weeding out as much of the bad stuff as possible right away, investing with the right operating team and the right, people
Exactly.
that actually have that experience and know what they're doing in this space, that have the right systems and team in place. And I think that's extremely important with anything you invest in, any company you invest in, being able to pick those winners and losers based on the team and their experience for sure. So, and I know
Yeah,
you've
like it's like, sorry to interrupt you, but it was like, for example, the best way to make money is to focus only on great people, and great people will make you that know what they're doing. Adult supervision, right?
right,
They
right.
know what they're doing. They're not going to make silly, stupid decisions. They're not going to buckle to investor, shareholder pressure to buy back stocks or
Right.
do something stupid or to sell an asset. They'll stick to their principles. And what I like is, I like companies, and this is really important, especially in the mining business and exploration, that they do not dilute the shareholder to just be able to pay their own salaries and their own benefits from the company. That the company must increase the value while they're diluting. I'm okay
Mhm.
with diluting shares,
Mhm.
diluting shares if they're increasing the number of ounces while they're diluting. If they're
Okay.
taking the money and adding ounces that they have, I'm okay with it. But if they're taking the money, if they're diluting the value of my shares to pay themselves, I'm not okay with it. And then eventually I'll find out real quick if a lot of the times really bad people will do that. And so that's, I cut out a lot of those things on purpose.
Yeah, you got to have the invest with the companies with the right mental philosophy. And if people relate this back to real estate, you could have a bad deal and a great operator and turn that around and make it a great deal in real estate. Or you could have a great deal and a bad operator and they could destroy the whole thing in as well. And, when you get down to the philosophy of the business owner in the first place, that's really, really key. And that's why it's important to really look at what they say and what their intentions are and also their actions, too, with this. And so I think that's all extremely important. And honestly, you've helped me a ton. I'm in your mining and exploration group and, get tips and tricks on all these different strategies all the time and different tech and different, things that are coming out on, different charts that I love your charts and the memes, of course. But how do people get a hold of you to learn more about this stuff and be able to, understand more about some of the philosophies and some of the specific picks that you choose?
Yeah, so I'm on social media, unfortunately. Well, it's the only way I can connect with people. So I'm
Okay.
on Facebook. You can reach out to me on Facebook, Andrew McDannels. I'm on Instagram, which is at Mining Investor Education, at Mining Investor Education. So you can follow me there. I also have a YouTube channel called The Free Capitalist. You can find me there also. And I'm on the Signal apps. I have my mastermind group is on the Signal app, and also my education group is on the Signal app. So basically, if you are interested, you just reach out to me and we can connect.
Awesome. And there'll be a link here for you guys to be able to follow Andrew and some of the ways that he teaches other people and has taught me a ton about this space. So I appreciate you very much, Andrew, and thanks so much for doing all this and teaching people all about a different way to invest outside of real estate and protect themselves, from pending catastrophe in different ways. So it's been awesome
My
to
pleasure.
have you here, man.
My pleasure. It's been hey, this is my passion, Matt. I love to help people. I really have a passion for teaching, and I know what's coming. So I really want to help as many people as possible to make sure that they are able to protect themselves and their families. Because man, what's coming can, you can either be a victim of what's coming or you can take advantage of it. And so right now, I'm helping people adjust their sails to take advantage of the wind that's coming, right?
Right.
And
Right.
so it's really like, it shouldn't, gold shouldn't necessarily be like I would say an alternative investment.
It should be a primary.
It's really thousands of years old. It's older. It's spanned the test of time.
Right.
And the reason why is out of favor, and really I'm a contrarian investor. So when people hate gold, I love it. And when people love real estate, I'm scared of it. Like for
That's
example, I always say if I see Kim Kardashian on TV promoting gold and silver, I'm selling.
yeah. Yeah,
so,
I hear you
so
100%. And it's the same thing with real estate. You go the opposite of the waves of everybody else's thinking, because when you do that, you end up, picking up great discounts and great deals on assets. Everybody thinks, ride that wave, up as everybody else, wants it. It's the opposite. You go through and, sell when everybody else wants it and buy when people don't want it, so I agree 100%,
if
on
you
that
like
philosophy.
if you follow the herd, you'll get slaughtered. They'll trample all over you. Because here's what's going to happen, right? There's a tiny little door, and there's 100,000 people run into this door, and it only fits one person at a time.
Right, right.
It's not going to. There's not enough time to get out in time. Now, you maybe have 6 months to 12 months to build a portfolio, and that's it. After that, train leaves the station, and that's it. I
Mhm.
mean, I already have, like, for example, in my portfolio, I have uranium stocks up, 20 to 40%. One of my lithium companies is up, I think, 140%. I have a natural gas company that I invested in. It's up, I think, 80%, but it was as high as 160%. So I think the kind of returns, like me personally, I'm trying to look for 300 to 1,000%, 3 to 10 times my money.
Okay.
And
Yeah.
the reason why I think that those returns are available, I'll leave this last little piece of information for you. Between 2001 and 2011, gold went from 250 an ounce to 1,900 an ounce. In that same time period, the gold miners made 17 times your money. I think
Wow.
that's going to happen again in the next decade. And I
Right.
think, actually, not in maybe in the next 5 years. And the, I'm not the only one who has this view. There's billionaire investors who say this is the best setup of their entire career.
Hmm.
And they've been in the business 30, 40, 50 years.
Right. Right.
So when they say stuff like that, you got to really pay attention and
Right.
then take advantage of it.
Right. That's awesome. Thank you very much, man. This has been a great
My
interview.
pleasure.
I love the knowledge base and the economic side of things, and I love the fact that you're following the data on this and following the right people that are giving you the right advice and as well. So thanks so much. I appreciate it, and we'll definitely talk with you soon.
My pleasure.
Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. 3 of the key pillars to becoming a successful real estate investor. Number 2, you can join us on our mailing list where you get tips and tricks on real estate investing directly to your inbox. And number 3, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.